in his Islamic law, they don't have interest rates. You can't charge somebody interest. But what you can do instead is you can buy an asset and then give it to the person who wants to buy it, and then charge them essentially a inflated price that they pay in installments. So you could do something like that where you actually own the asset and then you resell it for more in installments. There's actual ownership behind that. There's an actual asset behind that. It's not just inflated, created money out of nowhere.
Right.
So I
It's
don't
a
know.
big difference.
It's gonna reshape the way we do everything. Yeah.
So what would be an example of that then? Because I think that's how I see the future too in terms of like lending and stuff. So like what would be an example of that be for us in terms of like buying something and then paying it back in installments?
Yeah, it kind of looks similar, but it's like a bank would buy the home that you want to buy. You come to them, you say, "Hey, I want to buy this home, and can you finance it for me?" The home's $1 million. They say, "Okay." They get the money, they buy the home, they own the home, and then they basically have a legal agreement where you can live there, and you start to pay that loan off. And they charge you. They say, "Okay, well, the loan is a 20 or 10-year term, and the entire term you're going to pay us 1.2 million." And so that essentially becomes the interest rate,
Right.
but it's actually just paid out monthly, and it actually has a total cost. It's sort of a more transparent sort of, like, the asset is here first, but you could recalculate that as like, oh, I'm paying this amount of interest
Yeah.
annually. But the asset is already owned, right? And then it's just transferred upon completion of the installments.
And I think that's honestly one of the biggest problems that people have in terms of like financial literacy is like they'll see a house on the market for $500,000 and they think that's all they're going to pay for it. And then of course they get a mortgage with it and they probably end up paying over $1 million, I guess, depending on what the interest rate is at the time. But like you probably end up paying more than $1 million for that house between the principal payments, which everybody is aware of, you pay off your loan, but there's also interest every month. And that interest accrues, right? Like if you miss a couple payments or whatever, like so I think that makes more sense in terms of just being more transparent. And even though it is similar, somebody's still taking risk there. And you have to be rewarded for that risk. Like in that situation for us, like the bank's taking on the risk there.
Yeah,
So
exactly.
you have to
It's
get
just shared,
something for
it's
that.
shared risk. It's shared risk as opposed
Right.
to just complete borrower risk. Yeah.
Right.
Yeah.
And so, yeah, I mean, that just people could figure this out yourself, but like it'd be interesting to see how much the cost of a house is when you factor in interest. It's almost double, I think, like with like a normal 3, 4, 5% interest rate. But people don't see that.
No, they don't. And there's places that have that type of financing. There's banks where they like strictly only do like Islamic finance, and in the same country, it's not like it's complete, Shahir law or whatever it is. There's dual financing. So there's sort of like a Western option. But you go to one bank and get the Western option, and then one bank with the Islamic option, and they're comparable. Like you could get cheaper here or cheaper there. Like, so it does technically work in that
Mhm.
way. I don't know. I'm looking more into it. I'm going to generate sort of a thesis and a video concept about, like, because I'm trying to figure out like what the future looks like, the future of financing looks like on a Bitcoin standard. I think it does fundamentally shift. Like, what do we have now as an example that does work? And it seems to me that shared risk and asset ownership ahead of time fits more in line with Bitcoin because you don't have money creation in that moment.
Right. There's no money creation. It's also, it seems much less predatory too.
Yeah.
I don't see banks giving out credit cards, for example.
Yeah, it'd be more
just 'cause
line
the
of
risk.
credit, right?
Yeah. Or like asset-backed line of credit. So let's say you have
Yeah.
Bitcoin, you can borrow. I mean, if you have Bitcoin, you'd probably just, I mean, if Bitcoin's money, that's the world we're going into, right? We're not, I'm thinking like after fiat is dead, where you can just have Bitcoin, you can take it wherever you want to. In certain places, you can spend that Bitcoin. In that case, if you're borrowing Bitcoin, I think that it would be banks lending only to businesses that are creating more value rather than to individuals to buy whatever they want to. So I don't think there's going to be mortgages. I think people are just going to buy houses by saving for them. Does that sound crazy? Like,